All right, ladies and gentlemen, day 2 of Full Throttle. Let's go ahead and get airborne. Hopefully everybody's having a good morning so far. Going to make a couple audibles today, man. A lot of stuff happened overnight, shockingly, as usual. So we're gonna shuck and jive today and talk about some things I hadn't planned on talking about, but that's the way this works, and I absolutely love it. This is why Full Throttle is one of the most popular training programs in the industry. It's not stagnant. It's not 107 PowerPoint slides that are from 5 years ago. It's live, it's in the market, and we'll talk about that in a couple minutes. Really looking forward to it. So officially slots are now open. As of me jumping on the air, I think it's about 31 memberships remain. Even if we fill up before Thursday, I'll still keep doing the live trade briefs. So maybe you realize you should join as soon as the doors open. If you can't get in this time, for next time, I'll do a solo Amazon brief on Thursday. Solo Amazon is kind of our gateway drug. We just trade Amazon in that portfolio, and you're going to find out why I just trade Amazon, because it's the only stock you need to own for the rest of your life. Okay, quick update on the mission objectives. Going to give you some up-to-date intelligence briefs this morning. Man, 24 hours, a lot of things can change. And we're gonna talk about dogfighting the market this morning, and how we can potentially turn panic into profit. Flight schedule: we knocked out day 1 yesterday. Our welcome aboard brief talked about some investing basics and actually moved into a spread on Amazon. If you couldn't attend yesterday's brief, I just put the link to the replay page in the comments there. go.topgunoptions.com/FT Full Throttle -replay. This is where this replay will be, tomorrow's replay, and Thursday's replay as well. Just today, the replay, you'll scroll down, it'll say day 2, day 3, day 4. So there'll be buttons underneath here for the additional replays. Okay, any questions on that? That is the replay page. Yeah, the link to join is on the replay page, but let me give you the link directly right now. 50% discount if you do an annual membership, $29.95. If you want to kick the tires for a little bit, it's $2.95 a month, but you do not get access to our one investment club, the Hunters, over here. The Hunters is an investment club, and you don't get access to that. You get access if you do an annual membership, or if you do the Hunters Monthly. Okay, it's $4.97 a month. That's why this is the better deal. If you stay in the Hunters Monthly for 12 months, you know, it ain't cheap. That's why we came up with an annual to give you a 50% discount. So the majority of Top Gun Options members are in Full Throttle Max annual, and also the solo Amazon service. It's only 97 bucks a month, but we'll talk about that on Friday. Okay. Any questions about that? Actually, yeah, and lifetime too. Renato, yeah. Everybody, so it's called Collab. So Renato, if you just join, whatever you join, you have access to the app. It's called Collab. K-O-L-L-A-B. Collab app. Okay. So same username, same password, all that good stuff there. So yes, absolutely everybody. Solo Amazon, Full Throttle Monthly, everybody. Yep, Solo Amazon gets access to the app. For the Solo Amazon folks, for only Solo Amazon, you get access to this room, which is called the Ready Room. It's over here. So this is kind of your forum over here. It's called the Ready Room. Okay, so people post in here and stuff like that. So this will be on your app and everything like that. And then at the top, you click memberships and replays. And if you're just in Solo Amazon, all you're going to see over here is Solo Amazon. If you just decide to join Solo Amazon, you are doing yourself a huge disservice if you do not take the Options Weapon School training. It's $295, $297 for 5 training sessions. It's obscenely cheap. So please do not just join. Obviously, with Full Throttle, you get access to it, but I saw a couple folks, or no, more than a couple folks join Solo yesterday, and I didn't see too many people take the training. It's up to you, man, but I would not absolutely not do that. You have got, even if you think you know what you're doing, like I said, the motto of Top Gun is you think you're good, we'll make you better. And I guarantee you, even if you're a Jedi Master, I'm going to cover things that you just haven't, thought of maybe in a while, or see things differently. We're going to move into spreads today. I know we did one yesterday, but we're going to talk about a couple things. So today, 10 a.m., we're in it. Tomorrow, I'm going to talk about synthetic stock. We're going to get long-term bullish and do a tactic called synthetic stock. So I'm going to cover a bunch of stuff this week, different tactics to show you that I just don't have a hammer, right? You have a hammer, everything looks like a nail. Based on what's going on in the market and the name you're trading and your strategic mindset, that's the tactic you should employ. And then we talked about it Thursday morning at 10 a.m. is going to be solo Amazon. It is not part of Full Throttle. It's a separate training service, okay? Any questions? I already covered a ton of stuff yesterday. Watch the replay if this is your first brief. I know a couple strategic partners sent out emails last night promoting this, so I'm not going to get into who I am, Top Gun options, or anything like that, because that is all on the replay page. Watch yesterday's replay. Any other administrative questions? Yeah, the link to join is in the chat box, and then on the replay page, you can just scroll down and it says enroll in Full Throttle, and it breaks down what you get in those individual services, okay? That's obviously the best deal. It's a 50% discount off of this, but this is if you want to kick the tires for a couple months in the investment club and Full Throttle. Shoot us an email. Hey man, I'm ready to upgrade. I'd rather save a little bit of money. Good idea. And then this is the obviously the tire kicker. $295. You do not get access to the hunters. Clear? Okay, good. Awesome. Welcome aboard. Yep. A bunch of, and I'm sitting here after I get off this brief for, however long it takes. I have 19 books to sign or something like that. So I'll do this for the week. If you join Full Throttle Annual, I'll send you a signed copy of COVID Crash, my book. We're going to talk about that today because, well, let's get into it. Let's just start briefing. All right, we're done. That took 7 minutes. I'm going to pretend everybody in this room is currently a member. So I'm going to treat you like you're a member. No more talking about any of this stuff. You want to join, you join. Okay, strategic brief. One of the most disgusting things I've seen in this country in a long time, and that's saying something. Zelensky flying into Pennsylvania in an Air Force C-17. Going to a weapons factory where he criticized the Republican presidential and vice presidential candidates in a swing state. And then Governor Josh Shapiro was signing artillery pieces that are going to go to kill people on the other side of the world that we're not at war with. The United States Air Force flew this man in one of their aircraft to go criticize a month before the election the leading presidential candidate. It made me physically ill. I don't care if you're a Democrat or Republican. If Trump had done this to a foreign person, I'd be like, dude, are you insane? The guy is kind of insane, but this was disgusting. And if Donald Trump had done something like this, he would have been impeached for the 90th time. They impeached him for a phone call to Zelensky saying, we're not giving you any more aid money, dude, until you clean your shit up, until you investigate what's going on. Oh my God. Some fat Lieutenant Colonel Army guy, Vindeman, like ratted on him. He said this on this phone call and they impeached him. But this administration, yeah, exactly. Foreign, you want to talk about foreign interference in an election? The hint, Zelensky and Shapiro were doing yesterday was what? We're bringing jobs. This war is bringing jobs to Pennsylvanians. I'm going to remind you, ladies and gentlemen, if in case you forgot, Barack Hussein Obama told us for 8 years that we're not exceptional. Remember that? American exceptionalism. They, and especially his wife, talked so down about that. We're not exceptional. Americans are not exceptional. We're just average world members. We're just, we kind of suck. We're a bunch of racists. So for 8 years, we were talked down to American Ronald Reagan, we're a shining house on the hill, a beacon of democracy. If you're oppressed in this world, we're going to try and help you out. It went from that to we're not exceptional. Why am I ranting about this? Because half of the comments that I saw yesterday about this disgusting visit by Zelensky was what? Wiz, you need to shut up, man. American kids aren't dying. This is a cheap investment. Whoa, 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 whoa. I thought our kids and us aren't exceptional. So you're telling me today that, yes, we are better than Ukrainian kids dying or Russian kids. We're so much more elite. We have other people die for our causes. Which one is it? Somebody tell me which lane of crazy we're on. So we're back to being, at least our kids aren't dying. Oh, which one is it? Somebody set me straight, because all the people who years ago told me we're not exceptional are telling me now that thank God our kids aren't dying to kill Russians. I'll wait. This is disgusting. Unbelievable. I can't. It breaks my heart. I have a young kid in the United States military. Stop killing each other. But to do this right in front of an election in a swing state, it's an impeachable offense to me. You bring a foreign leader in to criticize your leading opponent. Anyway, let's move on. I had to get that out of the way. It made my skin crawl. And Josh Shapiro signing artillery pieces. Here's to another dead Russian kid. What? And again, folks, this is new whiz, man. Old me, before I sat with the medicine, I would have swam across the Atlantic to kill as many Russians as physically possible. Now I'm like, just stop. Gaza, Lebanon, Ukraine, Russia, Taiwan, China. Stop killing each other, man. But you got to feed the MIC. You got to feed the military industrial complex. All the failed generals and admirals, there's a revolving door between the Pentagon and the defense contractors. They lied to us for 2 decades. Everything's going great in Afghanistan and Iraq. Just give us more money and cool weapon systems. We left in the middle of the night, and the Afghan army surrendered in 48 hours. What? You didn't tell us that was going to happen? Well, it did. Now I'm going to Raytheon, where I'm making $1 million a year. Unbelievable. Moving on. This is the change to what I was sitting on the couch last night. I'm like, whoa, did you see what China did? China panics, cuts multiple rates and reserve ratio requirements, goes all in to prop up stocks. Do you see this? China tries to jolt ailing economy. So, ladies and gentlemen, when you see a central bank cut like this, it's a panic. Wait, you mean like we just did last week? Yeah, that's exactly right. However, and this is why my book is sitting on my desk, it wasn't a shameless plug for you to buy an annual membership. This details how at the height of the scandemic, I went over this book, beautiful bookshelf used to be packed with books on investing and books on trading and all sorts of charting and everything like that. After Jerome Powell in March of 2020 flew over the stock market and dropped the biggest financial nuclear weapon known to man, I wish I had taken a picture. I swear to God I did this. I went and put 30 of those books in the recycling bin. It's over with. And if you really want to see a funny looking whiz, when I was in my late 30s, early 40s in the Chicago Board of Trade at the Options News Network, I was at ground zero during the financial crisis. in the Chicago Board of Trade, in the Chicago Board Options Exchange. I was at the VIX pit when it went to 92 or whatever the last print was. I said on multiple times I was hosting that show, do not bail out Wall Street, Federal Reserve. Things need to be able to fail. If capitalism, if markets need to be bailed out, it's not capitalism and they're not markets. Of course, Ben Bernanke did not listen to Matthew Buckley, call sign Wiz, and bailed out Occupy Wall Street. Remember that shit? Too big to fail. AIG. Hank Greenberg should have went to prison. People should have gone to jail. Why this rant? This rant is because you trade the market you have, not the one you want. What China has been doing, I always have this name on my watch list, FXI. Look at the FXI, folks. Look at the past 6 months. Anybody see a trend right now? Whoosh. The PPT, we call it, the Plunge Protection Team, is jumping in to save Chinese equities. The People's Bank of China, the PBOC. There have been various times in the history of Top Gun options, we have been long-term bullish on FXI. When this happens, look at this, the FXI is up 6%. Now, the 10-year chart of the FXI is a little ugly, right? They do their, the PBOC jumps in to save their capitalism, and then it fades it. They take the punch bowl away, trying to let their markets and everything stand on their own, and it doesn't work. Then they do it again. And then they really haven't been doing it. But folks, this was at $25 yesterday. This topped out at like $50. If you, and I'm telling you, throw out all your books on investing. I could sit here for the next 50 minutes we're going to be together and list the incredibly good reasons why to get bearish on the FXI in China. From their housing to I'm not even going to rattle everything off. You know why? It doesn't matter, because I'd be wrong. Whether it's the Federal Reserve or the PBOC, the People's Bank of China, when they jump in to save the market, it works. Not for the reasons that old Wiz before the scandemic it would say. If you took Wiz from 2008 and put him in his live trade brief and listed everything wrong with China right now, I'd go, I'm going to sell the wife, the kids, mortgage the house, and get bearish on FXI. And then current Wiz would punch me in the face. Trade the market you have, not the one you want. I don't have time to do it today because I want to talk about dogfighting SPX, especially as the S&P 500 implodes right now. And I wanted to cover that, but I'm covering this. Long-term, well, I don't even want to say that. I was about to say long-term bullish on FXI. No, I would go, thank you, Greg. And Greg's very insightful. Folks, I would go, let me write this down real quick, or I'll remember. For our synthetic stock training tomorrow, I'd go out a year from now. So I'm not going to read this whole thing on you, but these two headlines, folks, China panics. Oh, geez, get bearish. No, you don't. Cuts multiple rates and its reserve ratio requirements and goes all in to prop up stocks. The PBOC will reduce the 7-day reverse repo rate by 20 bips. Dude, when I read all of these things, I go, I still have old me, folks. Trust me. Old me before the scandemic, old me before I sat with psychedelic assisted therapy. And there's still a little part of me that goes, oh my God, this is horrific. And then I tell that thing to shut up and go, buy it. When China turns on, look at this headline, time for China to turn on the printing press. Again, I have to say this more for me than you. It makes my skin crawl to trade like this. But stop it, Wiz. Trade the market you have, not the one you want. Does everybody understand this? If you're new to investing, you have no idea what I'm talking about. You see a headline like this and go, yeah, of course, get bullish on this. Me, it still makes me cringe a little bit to go, I kind of like the Fed last week, which we'll talk about in a second. But I do synthetic stock on the FXI on Thomas. That's what I absolutely would do. I would do a synthetic stock on the FXI. I wouldn't go out. Let's go look at how far the X options chain go out. I mean, that's too far into the future. I mean, and somebody was disagreeing with me yesterday. I'm going to repeat it. By 2027, China will take back Taiwan, period. I guarantee you that's going to happen. Xi Jinping is not known to be a liar. Xi Jinping 2 to 3 years ago had a meeting. Google this. This is public knowledge. He told his generals and admirals, you shall be ready by 2027 to fully take back Taiwan. And if you want to screen for higher command in China, you probably want to beat that date by a little bit. So here's what I'm getting at. I would not go all the way out to Jan of 2027 like I usually do with my synthetic stocks, as you'll learn tomorrow. I'd go mid because, just looking at the chart, like I said, they jump in, the market likes the crack pipe, they smoke it, and then it fades. Does everybody understand this? Okay. But let's say this. Let's say, Wiz, you're completely wrong. China reforms. Xi Jinping either passes away and a nicer dude takes his place, or lady, and peace breaks out. And China's economy stabilizes and good things happen. Well, then it's cheap. So the two reasons to get bullish on FXI right now would be they're not going to let their markets fail, folks. When you can dictate economic policy at the end of a bayonet, things happen. Do you remember? I'm old enough to remember we printed money trading their financial crisis. When was that? 2015? Somebody remind me. I think it was back here. Yeah, 2015 was their financial crisis. You remember this right here? This huge implosion. They banned short selling. They arrested 200 financial journalists for writing bearish stories. It's not funny, but here's what I'm getting at is when Chinese equities start to implode, Chairman Mao wakes up from his grave and says, no, 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 no. Pump it up, boys. Any questions on this? Again, we can, cover this. Graham, I didn't know. Graham's down in Australia. Any company doing business in China has signed an agreement that Taiwan is part of China. End of story. I did hear that. Even U.S. companies have agreed to that. I think Jamie Dimon mentioned that in passing one time. He couldn't criticize his dear Chinese overlords. Anyway, I spent too much time on this, but this is an actionable trade. I want to get back to my regularly scheduled flight plan for today, but when I saw, I'm watching the 2 Monday Night Football games and my phone started blowing up from my mastermind group, I'm like, holy crap, China's going to do it again. I was going to just buy some you can't trade options pre-market. I was just going to buy a couple thousand shares of FXI just before the open. 6% pop. Let's talk about this tomorrow. Yeah, I can give you these. This is a good read. Read this, folks. If you've never, so the FXI, you can't, as an American, trade Chinese equities directly. The FXI is an ETF that mirrors, it's their Dow Jones. It's their index, okay? So shrimp are a vehicle for eating cocktail sauce. The FXI is a vehicle for eating Chinese stocks. Okay, it's got all their big ones in there, and all the big ones are going to be saved. Okay. Rick, you're speaking my language. Rick said since the U.S. has no weapons now, any time under Biden would be a good time to invade Taiwan. Absolutely. We're broke financially. We're going deeper into debt. China owns $1 trillion of our debt. Yeah, we have no weapons, and trust me, it's going to happen. There was a U.S. Air Force general, 4-star, like a year ago, who got a little bit of heat for actually telling the truth. He sent it, I think it was the airlift command dude. He was a cargo guy. He sent a memo out to like his entire wing or whatever it's called, like, be prepared to go to war with China in the next 2 years. Get your affairs in order. Google it. Do you remember that? I think the administration was like, harumph, well, how dare you? I'm like, he's a fucking 4-star general, man. That's his job. If he's not telling his troops to get your affairs in order because we're probably going to war with China in 2 years, he should be fired. Any questions? Let's move on. So that was out of the blue, man. I'm like, wow. So, well, and look at the top, another top of the journal. S&P 500. We're running out of airspeed here, but Chinese stocks, Chinese shares surge on stimulus blitz. Welcome to what happened to us last week. I will absolutely admit that I got my ass kicked for, I think it was 3 weeks. Every time I tell this story, I'm like, I should go back and figure out what it was. I'm not. I'm too lazy. But it was a good 2 to 3 weeks in 2013, early 2010s. One of those when Ben Bernanke started the whenever it was, the QE bullshit. Remember that? We made up words. Quantitative easing. What? What's that mean? Oh, they're just going to print money and flood the market. It's quantitative easing? Yeah, it makes it sound cool. For like 3 weeks, I was bearish. I'm like, market, you're dumb. The reason the Fed is doing this is because the economy sucks. Barack Obama is an absolute shit show. The economy sucks. We're in trouble. Market kept going up. I'm like, no. Oh, wait, I lost on that trade. Well, the market, all of you people are stupid. Wiz is smart. The only reason the Fed is jumping in to save capitalism is because things are so bad. Got my ass kicked that second week in a row. I think by the third week, I really realized the stove was hot and said, done, gave myself a lobotomy and said, all right. And that's where we came up with the term bizarro market, right? In a bizarro market, good news is good news. Bad news is good news. And awful news is great news. So technically, we exited bizarro market last week when the Fed started cutting rates. Before last week, if there was some awful news, the market's like, yeah, that's great because now Jerome's going to have to cut and he's going to have to go big. Okay? All right. So, Thomas, when did you realize the USSA is a fascist country and that capitalism is over? It took me a while, Thomas. I was dragged kicking and screaming. When you got a guy who flew in fighters for his country for 15 years, lost 16 buddies, flying fighters, lost 3 of them to suicide. When you lose me, when I piss red, white, and blue. Should probably go to the doctors. You know things are bad when you lose people like me. This is why I remind you, and again, I'm treating you like everybody in here is a member, even if you're new. Take care of your family and your friends. That's all you got left, buddy. I have living here in the great Republic of Florida. I have zero in common with somebody in downtown Seattle. I guarantee you, or Massachusetts. Anyway, we move on. Did you see Nancy Pelosi? I follow on Twitter the the Nancy Pelosi trackers and stuff like that. A month or two ago, Nancy Pelosi, I mean her husband, not Nancy, of course, right? I don't place to trade, so this is these rules of trading don't impact me. Filthy, disgusting human being who does insider trading like you read about. So 2 months ago or a month ago, whatever it was when I read it, she dumped millions of dollars of Visa. Millions of dollars of Visa. What happened yesterday? The Department of Justice, it was reported, they haven't formally announced it, but little bubble floated yesterday that they're going after them, calling them a monopoly. Paul Pelosi perfect timing. Visa is down 3% today. Google it or go on Twitter to the Pelosi stock tracker. The reason I care about this is because if you become a member in October, September, October, usually October, not this September, we talk about seasonal trades. These are my seasonal trades. Visa, it used to be, not this year, Amazon, XLY, XRT. On your screen right now are 4 names that I usually, not always, usually seasonally buy for a Christmas rally. Visa usually prints money around Christmas, man. So for those of you who know about my seasonal trades, that one is, let's put that in a holding pattern, because again, it wasn't formally announced, but when the Wall Street Journal, everybody reports like DOJ is going to go after Visa for being a monopoly. Boom. It's a solid name, folks. I mean, look, there's a 10-year chart in this name. I mean, it just goes up and to the right. So added it to my whiteboard up there. Ain't doing it right now, man, because you don't want to catch a falling knife. I don't think they break up Visa. I don't think it goes out of business. If it keeps getting hammered a little bit, I would definitely look to enter Visa. Remember, and I'm stealing a little bit of thunder from my solo Amazon brief on Thursday, Amazon whiz, it's a monopoly. They're going to break it up. Okay. I'm old enough to remember Standard Oil, Microsoft, IBM, and AT&T. The average time it takes for Uncle Sam from the day they say, we think you're a monopoly, to breaking them up is 10 years. The quickest was 5. The longest was 15. So most names, look at Google. Google, what was it, last month? The DOJ? Dear Google, we think you're a monopoly. Stock freaked out, then shook it off. Same thing with Amazon. Last time I checked, folks, Jeff Bezos, depending on Tesla's stock price, is the richest man in the world, or number 2. He probably has a couple attorneys on staff to fight this shit. So, rambling about Visa, it's off my seasonal list for now, but I remember looking at this a couple months ago when I'm like, yeah, it was August. I'm getting my fall together. I was looking at my fall kind of strategic look, and I'm like, all right, let's look at our seasonal trades for the year. And I looked at Visa, and it's like, whoa, what a monster run, Slam. So if we can get back to where it took off from that monster run, 260, maybe a good entry point, okay? So had to brief you on that, mainly because, again, spit my coffee out. I'm like, oh, I can't believe that Nancy or whoever, very timely selling of her Visa shares. Look it up. Go to Twitter and look at it. Very good op-ed, folks. Very, very, very good op-ed. The Fed is flying blind. Investors don't seem to care. This headline just now, I probably should have read this first because it just encapsulates my entire rant about trade the market you have, dude, not the one you want. The Fed has no clue what they're doing. Did you hear that he kind of implied in the press conference last week? Well, first of all, he could not, I rewatched it yesterday in our mastermind group. He was pressed, 3-4 reporters. He could not explain why he did 50. The dude, shockingly, spoke with forked tongue. Everything's great. Everything's super fun, fantastic, happy time. Why are you cutting 50 then? Didn't you hear? I said everything's great. Yeah, but what? So he implied, and we've actually heard people kind of get to we should have gone 25 in July, but we didn't. So now we're double up to catch up, right? Great blackjack strategy. So they were kind of getting a little bit of we were maybe missed July, so now we're going double big. Wow. Markets are embracing the spirit of dovishness following the big rate cut this past week. Wow. So the market, being the crack addict that it is already looking out like, well, does that mean that, look at this. The basic question is whether half percentage point cuts are the new normal. Are you high? Fed officials say no. Only one official predicted cuts of more than a quarter for the rest of the year. Two in their dot plot predicted no cuts the rest of the year. And the rest said one or two. Whoa. Sorry, Fed. The market is saying you got to keep giving us 50. I love this sentence. But who cares what the Fed says? It's what they do. I love this line. The cynic in me supports the idea of ignoring the central bank's own prognostications, since my cynic is terrible at predicting what they will do, right? So it's for Jerome Powell, a Fed Reserve chief who says, I want to be seen as the most predictable Fed dude ever. And you guys we're not going to surprise you with anything. We're going to telegraph and you're going to know what's going on. And I fully love admitting when I'm completely lost. Hell, I thought they should have raised rates last week. That's where I am because I live in the real world. I see inflation. But good headline in the journal. I already shared this one with you yesterday in the brief, told you to read it. This one was a good thread on they're clearly lying. Well, I'll say somebody's lying. Somebody nicer than me says, well, something doesn't add up. Well, it's clear. The Fed is absolutely clueless as to what they're doing. But shameless plug for the book, trade the market you have, not the one you want, period. Got to keep reminding myself that. I laughed at this. Big rate cut forces the Fed to contend with new obstacles. How big will the next cut be? We can't even enjoy the last one, and we're on to the next one because the market lives in the white space. Wiz, the market is not you. The market is not namaste. The market is not present. The market is out here in the white. Dude, I'm already in November. I think we get 50 in November. It's September 24th, man. What can we? No. We're getting 75 before the end of the year. Whoa. All right, I'm here for it, man. But I agree with this one. The Fed didn't pivot. They're panicking. What else do we have here? Oh, we laughed about this yesterday. The day after Jerome Powell, everybody in this room is probably old enough to remember Animal House. I love the ending of Animal House, the parade scene, Kevin Bacon in his Army ROTC uniform. Remain calm, all is well. And then he just gets steamrolled by the parade folks, right? Kevin Bacon, Animal House. Didn't think we have an Animal House reference, but Jerome Powell in the press conference was Kevin Bacon. Remain calm, all is well. Or I love Leslie Nielsen, the Naked Gun, when he's in front of like the Chinese fireworks store that was exploding. He's like, nothing to see here, move along. And there was a ton of stuff going on. But anyway, transports and financials lead us in and out of bad, folks. FedEx imploded last week. Alan Greenspan, in one of his books, actually said, I used to call Fred Smith all the time. I'm at the Fed. I'm in a building in Washington. I would call Fred Smith in Memphis, Tennessee, and say, what's going on? So the day after the Fed said everything is great, FedEx said everything sucks. Yep. November probability of a quarter point is 0. Oh my God, Rick. I didn't look this morning. Listen to this, folks. November Fed meeting. Probability of 25 points is 0. Speaking of Animal House, it's Mr. Blutarski's GPA, 0.0. Half a point probability is 52%. 3/4 of a point is 48%. For the love of God and all things holy. Wow. That's well, I was about to say that's stunning to me, and I'd be an idiot. That's not stunning to me. It is, but it isn't. Exactly, Eric. Fat, drunk, and stupid is no way to go through life. The economy's so great that Wall Street is worried about everybody falling behind on their bills. I told you 6 months ago, the credit agencies were like, we've never seen credit scores in this country so low. Everybody's falling behind on the bills. What's the current credit card debt, folks? 1.2 trillion, 1.1 trillion in the United States, folks. Credit card debt. Everything's great. Do you see this? Microsoft needs so much power that they're restarting 3 Mile Island. That was in grade school. Do you guys remember that? Now, don't get me wrong, I'm a nuke power guy. All these windmills and solar panels and, you know, getting lectured on not using a plastic straw by Taylor Swift as she flies around in the world in her G6. Microsoft needs so much power, they're opening up a damn nuclear reactor. Long-term bullish Microsoft. We talked about it yesterday. Maybe I'm battling for synthetic stocks tomorrow, man, on what to do, FXI or Microsoft. I could not be more bullish on Microsoft. When in doubt, run to MAA, M-A-A. You have got to be, if you just got long-term bullish on MAA and did synthetic stocks 3 years out in the future and just kind of leapfrogged them, and when the new ones come out, you just did new ones, you would destroy most hedge fund managers. I guarantee you. So we'll see which ones I do tomorrow. Okay, you ready? Let's go. Let's get Renato. Great question. We're going to answer that one tomorrow. Why synthetic stock over a leap? We're going to talk about that. It's a great question. Okay. However, it is time to dogfight. I don't care. Look at this, folks. We printed money. We've been trading a tactic called double verticals recently. Up, down, up. S&P's running out of airspeed up here. The euphoria of the 50. I told you we're already out in November. Dude, it's not even October yet, and the market's out in November. So I guarantee you, and we talked about this, between now and November 4th, you will not see any negative macroeconomic data come out of the government. The chance of that happening is zero. We will get a jobs report. We will get some more inflation. We are getting macroeconomic reports up until November. Duh, they're not pausing them. They will be absolutely full of shit. They will either be slightly this, slightly that, or perfect. It will be porridge until the election. Now, I don't want to super live out into the future, but with that November rate cut and everything like that, we will cross that bridge when we come to it. But I think it is time to tactically, everybody's got their double verticals on. So this will be for current members who don't, and this will be for new members or potential new members who have no idea what I'm talking about. Okay. So before I even break into this tactic, we're going to step through this tactic because I love it. Markets 1, 2, 3, 4, 5, 6, 7. 7 days in a row. 1, 2, 3, 4, 5, 6, 7, 8. So the last time we did a bullish double vertical, I said what? Markets don't go up for 8 days in a row. I think this was in October. We had an October bullish double vertical on right here. I said, close it. We're either going to hover or pull back. What did we do? Both of those things. The S&P ran out of airspeed. We hovered and then pulled back to what I call the circulatory system. There's the 20-day, there's the 50-day, there's the 150-day moving averages. Okay. Now, similar thing. We had a 7-day, just remember this, folks. Anytime you see the S&P 500 rally more than 7 trading days, get ready to fade it. And it did. We faded right there. But now, ignore that fade. Here's the hover. Kind of like this one, rip your face off rally, hover, pull back. Same thing's going to happen, in my opinion, here. Rip your face off rally. We're at all-time highs. We're hovering up here. I don't think we're going to get a super massive slam, but I think we are going to start pulling back a little bit. Barry, good question. Barry's like, hey, why are you using the 150-day instead of the 200? Well, let's open the chart a little bit. Let's go to like a year. That's why, because it bounced off the 150-day. Let's look at the 200-day. Aha. So when we were look at this. The S&P perfectly hugged the 20-day until we had a little freak out, then hugged the 20-day again until we freaked out. And then here's why I use the 150, because when the S&P 500 exploded, I call these moving averages no man's land. This is World War I trench warfare. The market does not like living in between the lines. These moving averages, folks, are magnets. The market gets pulled violently down to one or violently up to it. It doesn't like living in between averages. So I was like, where did we bounce? And then I'm like, you know what? I probably think we bounced off the 150. Let me see. Look at that. So Rick, I'm a 200-day moving average guy until I had to look at it and go, oh, we bounced off the 150. That makes sense? It's out of where the market went. So let me close the chart again. There you go. I mean, we had a little drill bit through it, but that was that 3-day violent sell-off and then ripped up to it and then right back up to the moving average. Okay. Awesome. Good. All right. Now, like I said, I think we're in the hover right now to a tactical fade. Now, don't get me wrong. Israel's at war in Lebanon. It's clearly war in Lebanon. There's 600 people dead, and it's a horror. Iran still sitting on their hands. Zelensky interfering in our election yesterday in a swing state, which a lot of people just think is fine. China's a little quiet right now. I'm going through step 3, my commit criteria right now for the trade I'm about to do. Here we go. The trade I'm going to show you, first of all, I am strategically between now and the end of the year bullish. Cautiously bullish. What does cautiously mean? That means I have one hand on the ejection handle. Folks, whether it was my Chicago firm or if you watch the Showtime series Billions, we're not an investment committee. I mean, we have our groups, our lifetime here. We got 275 members in our lifetime group. But the good thing about that is, guess what? We post our stuff and leave it up to each other to figure out if you want to do something. When you're at my firm in Chicago or you're up at, Stevie Cohen or Citadel, they have what? All right, well, at 1 o'clock today, the investment committee is going to meet in the boardroom. We're having lunch brought in and we're going to talk about folks, we are single seat fighter pilots. We are single seat options traders. In the blink of an eye, breaking news, the blah, 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 boom, enter trade. Most firms, most institutions, most family offices cannot maneuver like that. When Warren Buffett started selling Bank of America, folks, when Warren Buffett dumps shares, it's a cannonball into the deep end, man. People notice, right? So cautiously bullish means I have one hand on the ejection handle. I'm going to trade the market I have, which I don't think we're going to see any bad macroeconomic news, but we're going to do that. The cautiously part is I am ready in the blink of an eye to pound it into the dirt with no mercy and to print money. Okay? That's my strategic outlook to the end of the year. Tactically, after this crack wears off from last week from the Fed cutting 50, it's great news the Fed is cutting 50. I told you last week, no, it isn't. We traded it and made some money, but we're going to hover and probably pull back a little bit. Okay? So Eric, how do you think the market will react if Kamala Harris steals the election? I will restate my election outlook. Donald Trump will be the apparent winner on election night, and he will lose the election in the following 2 to 3 days. That is the same exact election prediction that I made in 2020, and I ended up being right. Most people went to bed like, okay, whew, he squeezed it out. And then 3 days later, turns out he didn't. The same thing will happen again. I don't think the market's going to implode one way or the other. I expect, folks, I know you don't want to hear this. Some of you don't want to hear this. Some of you, this might be music to your ears. There is a solid 3 to 5% margin of cheating that Trump has to overcome. Unless he is up 5 to 10 points in swing states, if he's slightly leading to tied, he loses. And if he's behind in a swing state, he gets his ass handed to him. Don't want to hear it? I don't care. It's the truth. That's exactly what's going to happen. So, other than that, Ms. Lincoln, how was the play? October. Why the silence? I'm picking an expiration. Now let's do this one. So I'm going to go out on the S&P 500 to the regular October expiration. SPX, not Starbucks. Okay. So SPX. Where is it? There it is. SPX. All right. Finally, let's go out to the regular October expiration right there. Okay. 24 days from now. I'm going to teach you a little cheat method of, if you do not know what range the market, the S&P, might be in by the third Friday in October, here's how you do it. You ready for this? The S&P 500 is at 5713 right now, 5712. Unfortunately, this is going to be a bad example because there's a 5710 and a 5715 strike. There ain't no 5713 strike in between, so it kind of sucks. So it's going to be off a little bit what I show you, but watch this. I'm going to take a look at what is called the at the money straddle. If you have no idea what a straddle is, don't worry about it. I'm going to teach you. So the at the money straddle right now for the S&P 500, wow, is about $150. You see this Elizabeth Warren TP right here? Do you see the green TP? That range is what the S&P 500, the options market, is pricing in for a move. It thinks that the S&P will be above 55. What's that? Let me read these down. 5570. I'll just round up. 5570. And over here to the right, what's that? 5860. So this is not whiz, folks. This is the options market telling me, based on at the money volatility in the S&P 500, 30 or 20 whatever days out into the future. Does everybody understand that? If you don't understand that, I will teach you this in your options weapon school training. Okay. So that's a pretty wide at the money straddle in a month. 300. Let's go plot that out. 58. I wrote it down. 5860, 5570. Let's go look at the chart real quick. 50. First of all, we've never been up here before. 5860. Wow. So up here, 5570 is right there, just below the 20-day moving average. So the market is pricing today. As of me saying the word today, it already changed a little bit. It's a living organism, folks. This is the range that the options market is saying we're going to be between. Okay? Now, let's start building our trade. I think we're going to hover up here to slightly pull back. My bias is down to this direction, okay? Remember, if you're not a current member, you don't have the opposite trade on right now. Right now, we have a bullish double vertical. A lot of people closed it from last week. Some people are still holding it. That is printing money right now. So this is what I call dogfighting the market. You can have dueling trades on, folks, especially when the market's doing something like this. It's doing the heart rate monitor. Right now, we have a bullish double vertical on in the background that's printing money. If you closed it, good on you. Now we can put on another one that's doing that, the exact opposite. All right, so let's start with that. Bullish double vertical we have existing. Let's look at a bearish double vertical. Barry, that's exactly what it is, the one standard D. So if you think that we're going to hover and maybe even go down, on your screen right now, folks, is 2 trades. If you think something's going to go down, what do you also think? It's not going to go up. Now, I'm a political science major from South Jersey, South Philadelphia. Even that makes sense to me, but most people don't realize that there's 2 trades right there. Wiz, I think you're right. We had this rip your face off crack Fed rally. We're going to hover and probably consolidate and pull back a little bit. Agreed. Then you also don't think what's going to happen. We're just going to keep having this rip your face off rally. Precisely. So right now, ladies and gentlemen, we have 2 trades available on the S&P 500. Let me put the lines back on there. What was it? 58.60 up here. So if you don't think something's going to go up, put a roof on it. A roof that we're going to cover right now is called a bear call spread. I'm bearish, neutral. I'm bearish / neutral on the S&P 500 out to 24 days from now. I'm using calls, as I'll show you, and it's a spread. That tactic is called a bear call spread. It's also called a credit spread. We're going to take in money. We're going to get paid. The market is going to pay us to put a roof over the top. What am I going to do? You could just do that trade. Wiz, I'm not super convinced we're going to roll over. We might just hover. Then you just do what I'm going to show you, the bear call spread. If you think we're going to hover and fade a little bit, you take the credit that we're going to take in and go buy the basement. Go buy a bear put spread, which is a debit spread. I'm cheap, baby. I'm going to have the market help me finance a bear put spread. Now, I didn't do anything with an order ticket right now because for the people who are like, I'm kind of new to options, or I know what calls and puts are, I wanted to just give you that. If you can follow, put a roof on it, because I don't think it's going to keep going up, and I think it's going to fade to go down. The roof, I'm getting paid to do. I'm going to take that payment, and I'm going to go buy the basement. Any questions on that? I didn't even pull up an options chain yet to do any of this stuff. If you can follow that intuitively, welcome aboard Top Gun Options. This tactic is called a double vertical. One more time. We've been trading bearish double verticals, bullish double verticals. We've had dogfighting trades on. We've had both. As of today, if I put this one on, when I put this one on, this will be a bearish double vertical. Okay. I only do double verticals. Let me open up the chart. When the market tells me to do them. Double verticals are no good in this market going straight up. And here they were. No good, no good. Yeah, now good. Now, if we hover in election and then after the election get a Santa Claus rally, again, different tactics. But when the market starts showing you volatility, It's double vertical time. I'll give you the link at the end. Let me. I'm glad you're motivated. Let me stick with my trading, and then we'll talk about joining. 58.60. I took a look at the money straddle. Not me picking it. The options market picked it for me today and said, dude, we think it's going to stay at least below 58.60. So that's a good starting point for our bear call spread, our roof. So 58.60, 50. So I'm going to go all the way up to 58.60 on my strikes. And that's a starting point. That's not, definitely where, I'm going to do. But you know what? Right out of the gate, this is a good looking trade. The credit's $1.10. Let's go in $5. I'm going to go to 50. The mark, you're going to learn, I'll teach you a TOPGUN options. The S&P 500, let me go show you the chart, trades in $25 increments. No, it doesn't. It moves, folks. Look at this. Look, you see these my white lines here are $25 increments. It absolutely bounces through those 25s. See that? Or through it? Trust me, it's a $25 mover. So instead of doing 58.60, I'm going to do 58.50 as the bear call spread. So let me brief this. Sell a single regular October expiration. Now remember, folks, on the E-Trade platform, when you see October 24, that means 1, 2, 3. That means October 18th. At least on E-Trade, your platform might say October 18 is the expiration. On E-Trade, when it says the month and the year, that means the third Friday of October, the regular options expiration. Okay, you're going to learn all this in your options weapons school training. Let me press. Sell a single October 24 58.50 call, buy the 58.55, $1.30. Before we do anything else right now, you take out your pen and your trade journal and you write down $2.60. Next to $2.60, you write the words maybe eject. Why? Because that's where I'd maybe eject. I didn't say write down the words definitely eject. I said maybe. We want $1.30. We want $1.30 in our pocket, folks. If the S&P starts climbing and that trade starts increasing $1.70, $2, $2.60, that means the S&P is climbing and I might be wrong. But I say maybe eject because I'm good, but I'm not that good. I can't go 3 weeks into the future and say, this is why the S&P is going to be up and I definitely should eject. Or it's actually up and then it's going to fail and this trade's safe. You can't do that right now. What you do in a trade brief before you go flying in your fighter jet, your E-Trade platform, is map out on your knee board card, right? In my office, which was the cockpit, I didn't have a desk. I had 2 knees. So we have a 5x8 card that's called a knee board card. 260. Okay. So we didn't even place the trade yet. And I told you when I'm potentially getting out for min loss instead of trying to take that max loss. All right. Now that I'm going to grab a screenshot of this because I'm going to put this in the trade groups. All right. SPX was today's date, 9/24. The first place your eyes are going to look when I click on analyze is max potential loss. Do not ever look at profit first. Always, always, always look at max potential loss. $370. If you are not okay with risking $370, it doesn't matter if you can potentially make $130, folks. Stop it. Be a pilot. Put a check mark here. I acknowledge this risk, Wiz. I'm not going to be happy if that happens, but that's my risk. I know. I acknowledge it. Then look at the smiling face up there. For years, when this was Trade Monster, I used to battle with John and Pete Najarian, but they're big football players, so it wasn't that big of a battle. I'm like, guys, put the max loss at the top. Help our traders no risk. Don't put the smiley face first. Kind of like a casino, though. You want free drinks? Sure. Anyway, so Max potential profit, $1.30. Look at this. This is a high probability trade, man. There's a 70% probability of making your max profit. 29% probability of getting kicked in the gut. Max loss. But we have an ejection point, don't we? We should not be taking that max loss. And there's your break even, okay? Remember, you see that dotted line? That's the S&P 500 right now. I'll answer that question in one minute here. We make money 3 out of 4 ways on this trade. That's pretty damn good. Yeah, it is. SPX goes down, we make money. The S&P 500 doesn't move, Wiz. It just, you're right, it hovered. We hovered into the election till the end of October. You make money. Folks, the S&P 500 can even go up a little bit as long as it stays below that point right there. Everybody see this point right here? That is your break even. So 3 out of 4 ways you make money on this trade. How's the 1 in 4 way that you lose? S&P 500 is right there. Bang. You lose money in this trade if you're an idiot. If you don't pay attention to it and it just rips higher. I told you when to maybe eject, man. When you get filled on this trade, put the closing order in. And if in case you don't want to be caught off guard. Let me grab a screenshot of this too. And then we're gonna, I went long, folks, but I had to do this. I had to do my China rant because that's a buy. SPX 924 metric. We talked about this yesterday. I'm not going to go through the Greeks, but remember, with a credit spread, folks, you get what? You get theta, right? You get theta. You get time decay when you sell something. Okay. Now, folks, this is a credit spread. Let me write this down. Yep, I did. I know John and Pete from my time in Chicago. 130 bucks. That's the credit spread. Now that's the roof, folks. Where was the basement? 55.70. And that's pretty far down here. Oh, let me close our chart real quick. Back to 6 months. And remember, folks, we usually don't go longer than an hour. In full throttle weeks, we go a little bit longer. My apologies, but good stuff going on. 55.70. Which is in between. There's 55.50. There's 5600. It would be right in bit. If we're gonna pull back, folks, we're gonna hit this 20-day moving average, in my opinion. What is it? 56.11. So let's go look at a bear put spread down there. Options, obviously the same expiration. I'm gonna look at 56.25. I'll explain in a second here. One of them buying that and then selling the lower strike put. I'll go 25 wide down to 5,600. I'll talk through this in a second. Remember, shameless plug for your options weapon school training. This is an hour-and-a-half lecture on double vertical. So I'm going through it in 20 minutes. Wow, this ain't cheap, right? It's 475 bucks. But as my one buddy always reminds me, why is divorce expensive? It's worth it. So I like this one. All right, let me talk through this trade, the strikes, and then we're going to put it all on one order ticket, okay? Here we go. Buy a single October 24, 56.25 put. That would be right above, let me just show you where that is. It's above, it's in between there and there. Okay, so that's it. The reason it's not super cheap is because there's a probability it's going to happen, right? So if you wanted to go, you could go a little bit lower. You could do like, if you think we're maybe going to kiss the 20-day moving average, maybe you do the 5,600, 55.75. That was a little cheaper, but not by much. What was the difference? 56.25 is so you're saving 65 bucks if you go down to 5,600. Okay. Yeah. Okay. So ladies and gentlemen, on your screen right now, I'm bearish. I'm using puts and it's a spread. It's called a bear put spread. And look down here, it's a debit spread. But if you only knew a little bit about options, like, hey, I think the market's going to go down a little bit, I'm going to buy a debit spread for 400 bucks, I'd laugh at you. Well, I'd instruct you first. I wouldn't laugh at you. I'd say, okay, I like what you're thinking. You think the market's going to go down a little bit between now and third week in October, and you're buying a debit spread. Yeah. You're spending 400 bucks. Yeah. So if you think the market's going to go down between now and the middle of October, you also don't think it's going to go up, right? Yeah, well, duh, I think it's going down. Why don't you sell a bear call spread, man? Put a roof on it, take in 130 bucks, and instead of spending 300, you're spending what, 370? Yes. Now let's just put it all on one ticket, okay? And I'll show you what it looks like. It's called a bearish double vertical. Get the right contracts in here. These would be calls, 5850. I'll just put it on one order ticket, 5850. So I don't have like 90 screenshots. 5850, 5855. And then you can again in the training environment, I show one contract, but in a second here, I can show you if we were using real contracts in a second. All right. So look at the trade together. You're only coming out of pocket now 195. Let's go mid-market. There we go. 400. All right. The S&P is ripping around here. That's closer to reality. 225 was, I was thinking 250. Well, 260. Anyway, as I'm talking right now, the S&P is zipping all over the place, but you get the concept here. Let's look at the picture. Double vertical. There is your bear call spread. There is your bear put spread. In this trade, if you just did one contract, you're risking 760 bucks to make 2,200. That's a decent looking trade, folks. So right now, ladies and gentlemen, it would only cost you 760 bucks to hedge a market pullback in the next month. If you have a lot of longs right now, I got a lot of long-term bullish stuff in my portfolio. On your screen, the trade screen, is a hedge to protect your longs. But I also would call it a trudge. You making up words now, Wiz? Nope. Well, yeah, I did. I made this word up years ago in Chicago. A hedge you want to lose money on. Whoa. I go to a full throttle brief and the guy's placing a trade that wants to lose money. No. A hedge is not a trade. A trade, you want to make money. A hedge, when I hedge, folks, when I go flying in a seat, in a fighter jet with an ejection seat, I'm sitting on my hedge. I don't want that thing to make money. I don't want to use it. When I land after flying in a fighter jet and I look at the ejection seat and I go, whoo. So a trudge, yes, I did make this word up years ago, long time ago, is a trade that I'm pretty sure is going to make money, but also serves as a hedge to protect my longs. So ladies and gentlemen, the trade that we just covered is called a trudge. Thomas, great point. I mean, so look at where's the primary portfolio. But right now, folks, long-term bullish Chipotle, great looking trade. I got some Qs going right here. And then look at our October bullish double vertical, folks. This is the one I talked about earlier. It's up 83%, 3,900 bucks. Let's look at how we're doing. This is the primary portfolio. Month to date, look at this. Month to date, folks, we're up 22 grand. 18 trading the S&P 500. So right now, it's time. I got my bullish double vertical on. It's time to throw this one on. I didn't close this one from last week. I am going to close it now. Let me do this. You know, as we're hovering up here, I'm closing this one. Let's do. So let's do that. That was on my list. All right, trade alerts. Let me do this. Closing. Oct. Bullish. DV. So taking, what was that? 80. What they say? 83%. 88%, $3,900. 88%, $3,900. Taking 88% slash. When did we put this? This was like 2 weeks ago. Was this? This was the last PLTB. Whatever. I think it was in a week. I can clean that up, but let me get this posted real quick. So, ladies and gentlemen, for those of you who are new, and I'm just treating you like you're a current member, in 1 week, in one trade on the S&P 500, we made $3,900. Your full throttle annual membership is $29.95. One trade, 1 week. Let me post it in the hunters. Closing, Oct, bullish double vertical. And this one I put at everyone. So there's an app alert that goes out, right? Everyone. And make sure it's in the trade alert thread. Okay, boom. There's my app alert right there. So just fire it out to the app. If you're not in the live trade brief, because you got to work on Tuesday mornings, you just got an alert on your app saying we're going to take profits there. Okay. Wiz, what exact series? It's the regular one, not the AM, Pete. It's the regular ones. Okay. Yes, it's in the App Store, folks. It's called Collab. Let me show you, folks. I need to post this trade though. Right here. I can get you. It's Kollab, folks. It is Collab. Okay. Kollab. There's a little video. Let me have the link to share this. It's called the Collab app. It's got a K on it. Let me show you what the. It's called Collab. Kollab. You got to be a member though, folks. Obviously, you can't. I mean, you can download it. You're not going to be able to log in. But there's a perfect example. In the old days, I'd have to send out like an email or a text alert. As soon as I pasted that in the thread, I got an alert on my phone and I can open it up right there. Okay. So I closed that Tredge, man. Or not Tredge, the bullish. There, I got filled. Boom. Now let's do, I got to take screenshots of the double vertical here. But somebody asked about the different ratios. Yeah, let's do this. Maybe do like price out 3 contracts up here and maybe 2 down there. No, 5. Let's do 5 up here for the bear call spread. It's a good looking trade. Let's do 3. So, folks, in a $100,000 model portfolio, which we manage here at TOPGUN Options, only about 30 to 50, depending on what's going on, cash is deployed. The rest is kept in cash, right? Let me give you my SOP. My SOP, folks, is not to risk more than 5% on any one trade. Why 5%? It's not going to blow me out. And it's a good risk to reward. Some people do 2.5. Some people don't. I'd never do more than 5 5% of my model portfolio is the most I want to risk on any one trade. If you're just starting out, call it 2.5. So this is exactly to live to fight another day. So folks, this is a good risk reward. You're risking $3 grand to potentially make 7. Now, if I was going to do full model portfolio, $5 grand, let's go look at the contracts. It would probably be, let's go up higher on the debit spread and see what that does. A little higher on the credit, a little higher on the debit. Let's just stair step it up. That's pretty close, man. Maybe one more in the credit spread, one more contract. Pretty damn close, folks. So for the model portfolio, this is what I'll do. Let me shut the room and place all these trades and clean stuff up. This trade would risk $4,500 and you would potentially make 11.5, 12 grand. Yeah, 3-to-1 ratio isn't too bad. Remember, the window you're looking at me in, there's a little camera icon on the top. You can click that to take a screenshot of this right now. Because I'm going to go back to one contract so I can post it for all the members, okay? I love that we just closed that bullish double vertical for $4 grand essentially in a week. You saw that live. That ain't no lies. That was a bullish double vertical we placed last week before Jerome Powell. Might have been 2 weeks ago. Don't quote me on that. A week, or it was within the past couple of weeks. Sorry. 9/24. And then let me post this to the current members. Folks, yeah, whoever said that, thank you for reminding me. 789. I talked about in the credit spread, maybe ejecting at double the credit you took in, 260. I covered this yesterday in the brief. With your credit spreads, 7, 8, 9. If you're looking at a 70, 80, 90% profit on the credit you take in, folks, close it. Don't forget tomorrow. I want to talk about Chipotle. I'm loving me some Chipotle right now. And the Qs trade is up 200 and it's up about 300% since we put it on. $2,300. The Qs trade's looking good. Year to date, this portfolio is 138, 139-ish. Got our Chipotle in here, some Qs and some Starbucks too in this portfolio. Okay. To the guy, a couple of people asked, I wasn't ignoring you. Here's the link. So folks, again, one S&P 500 double vertical paid for an annual membership. Almost, well, technically a year and a half. It was a $4,000 trade in a week or 2. Let's just say it was 2 weeks. Not guaranteeing you that's going to happen, but folks, I print money trading the S&P 500. We have an absolute blast. I call them sniper shots. Usually when I'm sitting here doing foundation and TGO stuff, I fire what are called sniper shots into the S&P 500, man. So again, close that double vertical right there. New SPX day, bear call spread. Boom. Closing at a nice 60% profit. Oh, this was Friday. Big operations expiration today. I don't want to risk it. Nailed that one. That was a 60% profit in, I think it was about 2 hours or something like that. So this is, if you join the Hunters, folks, the annual membership or the Hunters monthly, you get access to the Hunters here. All right, let me post this in the Hunters real quick. And then, yeah, the link's right there, folks. I just put it in there. My phone's buzzed a couple times throughout this brief. So I guarantee you we have less than 31 memberships left. Okay, so grab your annual membership, folks. $4 grand, double vertical in 2 weeks. Just closed it live in front of you. Paid for your annual membership. New Oct bearish. This is dog fighting, folks. Isn't this awesome? All right, so I'm going to at everyone. That notifies everybody in the channel. Go to my desktop, I grab the trade. It's right there. I go and grab the metrics of the trade, the other screenshot. Right there. All right, so new Oct bearish, SPX, new Oct SPX bearish double vertical. What's the name? In the trade alerts thread, boom. That alert just fired to the app. My phone just buzzed. 329 people in the hunters just got that alert. Again, if you're in death by meeting, you just got it. Go watch the replay at lunch or, when the kids go to bed or something like that. Let me post this for the lifetime folks as well. I love doing this stuff. New Oct SPX bearish double vertical right there. All right. Any questions, concerns? Oh, by the ways, thank you. I appreciate that. Yeah, man, this is what I do. This is Full Throttle. I'm not a guy that, hey, join me for a brief tonight and I hit you with a bunch of slides and ask you to buy something. You just joined a real live trade brief. Closed Oct bullish double vertical for nice 80% plus profit / 4K. I'll say in a couple weeks. I forget when it was recent. I don't know if it was last month, Tuesday, or in a couple weeks. All right. Boom. And yeah, when you're on the app, you just on your phone, you can click on this thing. There's the trade. You open it up. This is awesome, folks. This is our new website. 3 months ago, I think we launched this. This is awesome. The old one was Frankenstein and all sorts of stuff. I absolutely love this app. I can be on the beach, on a ski lift. I can be doing whatever. Anything else? Yes, the replay for this will be up here in, I don't know, give me half an hour. I got to go stand up, man. I've been sitting here for too long. On Tuesdays and Thursdays, I don't do my yoga in the morning. I have my mastermind call with, oh, sorry, I didn't press enter on that. There's the link to join. And there's the replay. I do my mastermind call. I'm in a private group with the Pentamerate. There's people in defense, Capitol Hill, hedge funds, psychedelics, politicians. It's a cool group of folks. And so that's why I covered FXI this morning. A bunch of people were going to jump on FXI. Again, it's just so creepy to say. You're telling me you're going to be bullish on FXI because everything's bad? Yeah, I am. Do you not understand? If you're new to trading, you should completely understand that. Everything's bullshit. The Federal Reserve, all these central banks making the evil 1% even better. Barry, Sabra, we're going to talk about Sabra tomorrow. Ladies and gentlemen, this is your homework. This is the only stock I'll tell you to buy ever, like rarely. I don't buy stocks, I trade options. This stock is up, what's that? 43% since I told you to buy it. And it gives you a 6% dividend. Why do I tell you to buy this stock? 6% dividend, and it's up 40% since I told you to buy it 4 months ago. We'll talk about that tomorrow. This is a vehicle for eating one of the private investments that 18 TGO members got to invest in, who are already filthy, who are doing very, very well with their investment. This is a substitute for that private investment if you couldn't get into it. We'll talk about that tomorrow. Any other questions? Good stuff. FX high is now higher at 29.73 than the previous high of 29.53. I'm telling you, folks, if it doesn't make sense to do it, but it absolutely makes sense to do it. Look at that. Damn it. Yep, there's the last peak right there, and we went through it. So creepy to say, but buy China with both hands. Hour and a half. Didn't mean to go this long. I promise you these briefs aren't this long. You can tell that a half an hour of the Full Throttle stuff gets chunked out. Tomorrow will be a full trade brief without me. I'll probably tell you how many slots are left, and that's about it. And then we'll get right into the trade brief. And then Thursday will be a solo Amazon. Okay? Everybody having fun? Day 2, full throttle in the books. You're welcome, Mark. Thank you. You're welcome, Renato. All right, folks, I'll get the replay posted on this page shortly. If you become a member, download the Collab app, K-O-L-L-A-B. I can send that out in an email. I'm pretty sure it better say on your receipt to like go download the Collab app. If not, I will tell my customer support people right now to make it say that. You're welcome, Scott. And John. All right, folks, have a great rest of your day. Happy hunting. Make sure you're hedged. Guess what? Which we are. I just showed you a hedge. Fights on, namaste, and basi basi. See you tomorrow.